Good afternoon, everybody. Welcome to 12-Minute Trading. My name's Doc Severson, and I've got Dave Lukas over here. Today is Monday, the 30th of January. As we're closing out the month and looking to Wednesday's Fed meeting, we have peak risk for the first quarter of 2023 happening this week. We're going to get movement by the end of this week. We have so many landmines. And we got earnings coming out with the major earnings this week. We have the Fed meeting and the Fed press conference on Wednesday. We have jobs report on Friday. Man, we couldn't ask for more volatility than what we have this week. What you got, Dave?
What I got is I am not doing any trades till Friday after market open till about mid-morning. That's what I got. So I am just going to sit back and watch the fireworks and the carnage unfold here and see where it takes us. I think it's going to be a whipsaw week. I think, today's a down day. Tomorrow, probably an up day. Wednesday's the Fed day. You're going to have that crazy movement you always have when he speaks. The last few Fed days, market's gone up. So we could see a rally off 25 basis points unless he comes out super hawkish. So we'll see what happens with that. And then I think really Apple and those earnings are going to be a big thing this week. I think after Microsoft and, I think the Fed's going to give the market what it's expecting, again, aside from any language by Powell, but I think they're not going to do 50. I think they're going to do 25. And I think the market's going to be okay with that. Then they're going to turn their eyes to earnings with Apple. You got Amazon, some others, and then obviously jobs report on Friday. So it's just one thing after another this week. And it's one of those weeks where you just let the market tell you where it's going to go. We've got a weekly chart. We talked about this. We were on Thursday, so it's kind of a continuation of that discussion. But we talked about this weekly chart that is absolutely fully charged, the highest that it's been charged in 3 years. And it looks like it's releasing higher, right? But it's such an early stage that it's just way too early to call that yet. We are at those levels that we have fallen from every single time, this past year so far. So it's that time either we're going to break through or we're just going to continue that trend back down, and we need to let it play out and then take advantage of it.
Yeah, the price has just sort of gotten trapped into the end of this wedge, and it's gonna break one way or the other, and it probably is going to break at some point by this week. That's what we're thinking is that, the pressure is there
for sure.
The pressure is there for that. Now, the Fed has done what I would have to say is been, if I'm going to give the Fed any credit, they've done a good job of telegraphing what they expect their anticipated rate hike or any kind of rate decision to be. So we've not had any surprises from the Fed in terms of their rate decision for a number of years, especially since Powell's been in play. So Powell's been very transparent about things. The problem has always been his tone, especially during the conference afterwards. He completely torpedoed the market last April. The market was looking for a certain rate hike. He went in hard and heavy and hawkish, and all of a sudden it was look out below. That's precisely the moment last April where we went from a correction all the way up to a full bear.
Well, look at August. This move that we just had over the last few weeks resembles, it's not as far as we got in July of August last year. That was a weekly swing higher. So if you look at the chart, that was a weekly energy release higher. So if you want to know what type of move is on tap either way, that's the length and the level of a move that you're looking at, right? But it was towards the end of that swing where he came out early September in Jackson Hole and said, there's going to be pain and all this other stuff, right? So the question now is so there's a couple things. PCE came out last week and it came out in the 4s, right? Well, guess where the Fed rate is? Their preferred gauge of inflation is now what? 4.4, I think it was last week, right? 4.4 is what it came in at. Well, rates are at that level. And if they go up a little higher, they're going to be above that. So isn't that their whole thing? They said they're going to raise till their rates are above where inflation is, and your preferred gauge is at 4.4 below there now. So to me, it's like, okay, if that's what you said you're going to do, you've accomplished that mission, right?
Check.
So now it becomes Powell's ego. Is he just one of the, at that point where he does not want the markets to go higher, and decides that, I personally don't want this to happen. I'm in control. You're not in control, market, and decides to say whatever. I think the language would have to be, this isn't over. We're going to keep raising rates, even though we're above inflation. Yada, you know what I mean? Yada. It's going to have to be pretty egregious at this point, but we'll
yeah,
see.
if he comes out to the podium and he starts doing this kind of thing, then we know we're in trouble. So. Well, that is my concern, and this is some of the things that I was reading into this weekend, which is always dangerous because you start reading things and you're gonna pick up different opinions. But a lot of times I like to see the other side of the coin. Like Friday, I left Friday. I was like, it was pretty bullish. I was like, man, we got something really good going here. This could be the final release before we just take off. And then, I like to kind of couch that enthusiasm sometimes with a little bit of, sanity. And, somebody was saying that the Fed does not like the market getting ahead of it. And clearly the market's gotten ahead of it. First of all, it was the Dow coming off the bottom in October. And now we've seen a huge move in the NASDAQ. So the NASDAQ has picked up the baton and they're going forward with the relay race here.
Sector rotation out of the Dow stocks into the NASDAQ, back into growth. And that makes sense at the end of a rate hike cycle. Like at the end of hiking rates and stuff, it makes sense to get a little bit more of that growth exposure, because you've got the rates have come up to a point where these dividend players that you were getting 3% and 4% on, rates are now there, right? So you can go safe. So where are you going to get your growth? Because 3% and 4% for most isn't enough.
Right.
And so where are you going to go? You go back into growth. And so that makes sense to see some of that rotation in. I think we've gotten to a point where we've gotten to an exhaustion level on the daily charts. And that's kind of what we're seeing today, a little bit of a pullback and stuff. We may, it'd be crazy, but I wouldn't be surprised to see us walk sideways this week unless we get a big down move and charge these daily charts back up and then go shooting up from there, right? If we're going to release with the weekly chart higher, right?
Yeah, so this is what Dave's talking about here, is that the price smacked up a resistance at right around 4,100 on the cash index on Friday. And now what we're going to see is we're going to be dropping some of these candles. This big red candle is going to drop off the back of my sample starting tomorrow, and that is going to bury the energy on this daily chart. So this is kind of like it's a family of time frames. We're always looking at this, and right now the parent time frames, and this is what Dave was talking about, is fully charged. So we have weekly and monthly charts ready to go, and it's just a matter of when we get the daily. It's kind of like parents trying to go on a family trip and the 2-year-old is melting down because they haven't taken a nap all day. It's kind of what we're going to deal with this week. Is we're going to get a little bit of shake and bake and a little bit of volatility this week, and it's going to fire that chart right back up again. We're going to be ready to trend by the end of this week.
So. Yeah, and that's why it makes sense just kind of sit to the side and then let it tell us which way it's going to go. Do I think we're going to have a clear conviction of that trend by Friday? Probably not. We'll have an inkling with what levels held and stuff. NDX retakes 12,000 and goes up above it and holds, right? That's a pretty telltale sign that it's got a good spot to bounce off of or
so it's not only the price that we'll see the clues from, but it's also the price action that we'll see the clues from. Yeah. So think about the last times that we've seen a big breakout, like from a CPI report or from the Fed or anything like that. We've seen initially kind of a knee-jerk response to the upside and then persistent selling the rest of the day. If that changes where we get and maybe it's actually the opposite, because if you go back to the very bottom back in October, that was a bad CPI report that got knee-jerked back up the opposite way. So we may see the same kind of thing. We may see an initial reaction down, which gets closed and squeezed higher into the end of the day. That's what I would be looking for. I don't want to necessarily see an emotional reaction to the upside out of anything that we see on Tuesday, Wednesday, or Thursday, or even Friday for that matter. It's always,
Well,
we always want to see kind of like the Groundhog Day move where we start out the day weak and then close into the closing
well,
bell.
and like today's a good example, right? So we've been a pretty weak all day. We're at the lows of the day as we're doing this right now, going into the final hour of the day. So do we see some strength come in and run things back up through the end of the day? That's a good sign that these levels are holding, and that's kind of the thing that we want to continue to see this week. The Fed day is always a crapshoot. It's going to be all over the place. You can be up 100 points on the S&P, down 100 in the span of an hour on that thing, but it's where it ends is where it's going to matter this week. And so again, a lot of landmines, a lot of things that can get in the way. The market always loves certainty, and that right now that's the key. They want what's the certainty? Once the market gets the certainty, it goes, right? So you've got uncertainty into the Fed, you got uncertainty into Apple and some of the other earnings. I think jobs numbers, I don't know if the market is giving as much of a credence to jobs numbers now that the Fed's slowing down, especially if they do 25, right? I don't know if jobs is going to matter as much. But we could be back into where bad news is good news. So if it's a huge, or bad news is bad news. So if it's a huge jobs miss, then all of a sudden the market could take that as a bad thing, right? And
and the other way to look at that is if we have a big miss, then the Fed has clearly done its job. They're done. They're out of the way, and then we can move forward on this because, I think the Fed is in a much better position. They're much more comfortable when things are weak, and it's their job to kind of step in and play the hero. Like when we see that, like a big, searchlich goes up into the clouds with a big F on it, like
we need the Fed, right?
Yeah, Powell, exactly. Here I come. That's where the Fed, I think, is used to playing that role over the past 20 years at least. And right now, they're not really. This is very strange territory for them that we haven't seen, quite honestly, since 06, 07, where it's like, rate hike, and playing the, the Mr. Scrooge level. So if they go too far, then they're into good stuff. And actually the market will celebrate that as well.
Yeah. So like I said, right now it seems like things want to go higher. We will see again if the mother of all trend lines and everything holds and we get that pullback from these levels. I mean, again, the most telegraphed recession in history, supposedly on the horizon here. And you can find evidence to refute that. You can find evidence to support it on both sides. Again, price is all that matters. We'll see how things play out. But again, what the market hates is uncertainty, something that comes out of nowhere that is not priced in and not expected. That's what causes black swans. That's what causes really big time, moves in the market. So right now, there's not a lot of that on the horizon. I think the Fed is telegraphed pretty well. I think, earnings, you can get a little bit of surprises, but they're pretty good at calling earnings, and the earnings season's been pretty decent. Jobs are coming down, right? And that's showing that things are slowing. Everybody says there's going to be a recession. The market's pricing things like that in already. So we could see the market do the opposite of what everybody expects it to do, which is just roll over and go to new lows, right? Everybody's S&P 3000, all that stuff. You could actually see it run, back the other way and just, get everybody off guard. And usually that's what it'll do to people because the herd, that's what they think. It'll go the opposite direction.
This week reminds me of, when I was back in school, and these are olden days, right? When, the old paper scrolls and everything like that, where we'd get our report cards in the mail. We didn't know, we couldn't, there was no computer system to be able to, we were still on an abacus back then, I think. But, so we'd get our grades in the mail and we'd have to wait for the postman like every day, waiting to see whether, and then finally it would come and it's like, oh, you could just feel the excitement. Then you tear open the envelope and then you check your grades and the certainty comes or the uncertainty of, like if you didn't do as well. But it's kind of the same thing. And just getting past this week, you can feel like the market is, you can just feel this sort of like it's kind of holding on to its breath. And then eventually what's going to happen is, we're going to get a release. We're going to get a release. And I guess the caution I would give to you guys that are out there, so whether you're watching us live or whether you're checking us out through a replay later on, Appreciate you watching us, by the way. Make sure to subscribe because you can get notified for these things when we do decide to broadcast. So, but it's one of those things where it's like, don't fall for the initial reaction. The initial reaction is usually false from these things. It's the measured response that comes in after a day or two where it's like, okay, that wasn't as bad as we thought it was, or that shows that we're at peak evil right now, so we're ready to go. So that's kind of what we're hoping for.
You're going to see it till Friday. You're not going to see it till Friday because the Fed's going to do its thing, and then a lot of times you'd normally see the next day be the real move. You got Apple and some bellwether stocks reporting after market, after close that day. So I think Friday, jobs reports in. You've got Apple out of the way. You've got all that. That's when people are really going to start putting their money where they think things are going. That's going to be the move to watch.
I agree. So we are going to be doing this again. What is it? Next, are we good to go next Monday, Dave?
Next Monday, I'm actually traveling, so we may have to do next Tuesday. We'll let you guys know. We'll put it out there.
So, between now and next Tuesday, we're expecting to see a pretty good move. So next Tuesday, we're going to be back here again and reacting to the move that hopefully is. So we're looking forward to getting this out of the way. Until then, I'm Doc Severson. You got Dave Lukas. We are 12-minute trading. So we are done. So don't forget, write in with your questions, and we'll address them next time we do this, next Tuesday. All right, everybody. Thanks for checking us out. We'll see you then.